All right, well, launched it live and and we're recording. All right, thanks for joining me, everyone, in the live recording of the webinar, and everybody who are tuning in after the fact, either on YouTube or on live stream as well. So I want to say thank you, everyone who is watching and or listening, and I'm really excited to be able to share with you some insights into utilizing self-directed IRAs for investing passively in real estate this evening. This is something that I personally have done myself with my own self-directed IRA. So I'm not only a promoter, but I'm a user of the system. And then also, I have helped several other investors set up their own self-directed IRAs as well, or at least guided them through the process. So this is something that is not a first for me and not something that I'm teaching from no experience from either side. So as an operator, I've accepted self-directed IRA money onto my syndications, and I also have invested myself passively. So we'll go ahead and get it started. I'll keep letting people into the waiting room as we go along. But this is meant to be an interactive webinar with a Q&A and opportunities to be able to jump in. So those of you who are live, I would love for you to jump in and ask questions. I love answering, live questions if I can. I'll do my best to do that as we continue forward. So, all right, we'll get it going. So today we're here to learn about how to unlock and use your retirement funds to invest in real estate and build long-term wealth. Uh, how to invest in real estate using a self-directed IRA. Welcome. I like to welcome everyone with a quote each month, and this month's quote is, "Money is only a tool. It will take you wherever you wish, but it will not replace you as the driver." So the key factor in that quote is you as the driver. You should be the driver of your wealth, and you should know exactly how your money is invested and every important aspect of it. Well, my name is Lee Fjord, and started out as a property manager in 2012. Today, I've owned over 1,230 apartments. I'm a full-time multifamily real estate investor, syndicator, owner, and operator based out of St. Louis, Missouri. And the reason why I do these monthly webinars is to be able to schedule time with you. So I openly request that you schedule a calendar appointment with me. So scan the QR code and or go to greenforestcapital.com and book a call. All right. The big question: do you have money sitting in a self-directed into a retirement account now? Maybe left over from a previous job that you left in the past. Well, most of us do. Most investors at this point do. We've had careers already, or you have savings and you have invested it over the course of many years, and the and this process of the self-directed IRA is not to replace that. It is to utilize the money that's actually already there. So there are some very key differences in a self-directed IRA and a traditional IRA. In a self-directed IRA, you have true control over how your money is invested. And we're going to learn more and more detail about this as we continue along. Most traditional IRAs are limited to like mutual funds, stocks, bonds. It has to be managed by this, big professional institution that has signs on glass towers and downtown buildings. They have a They don't have they have a preset restricted options for you to be able to invest your assets or invest your capital into assets, which you have little control over, if any at all, other than maybe, choosing what brand of laundry detergent you are going to be buying at the grocery store. Whereas with a self-directed IRA, you have full control. You can invest in real estate and alternative assets. You have a wider range of options available to you to invest your money and ideally have greater return potential. Uh, you choose the investments. All right. Uh, Most retirement accounts are invested by default. Um, they are just, you click a couple buttons when you're hired at your job, and it is automatically invested into mutual funds, ETF funds, target date funds. These are things that are chosen by the financial company that your employer hired to manage the retirement accounts of their employees. It's meant to be advisory, but what does it ultimately usually result in? It usually results in lower returns and higher fees than what you would receive. The key factor in there is higher fees. That's where JP Morgan Chase makes all of their money off of you, is on charging you management fees, just like all of the other services. So there is another option outside of your traditional retirement accounts. That is to be able to utilize a self-directed IRA. You take control of your money. You have the ability to make decisions on when and where, what, how, and when, and where and how much is allocated to each individual investment at a given time, and giving me the opportunity to invest in things like real estate, creating cash flow, creating cash flow which can compound. And you can also do this in long-term wealth growth strategies. Um, Anything from real estate to private equity, precious metals, startup companies, anything. And you can even loan people money out of your self-directed IRA, all through a single intermediary, even crypto. Like what I do with my cash flow distributions in some cases is I invest it into crypto, the cash flow that I received in my self-directed IRA. That's honestly what I did. Bought some Bitcoin with it until the next deal comes available. So what is a self-directed IRA? Well, self-directed IRA, it is a outside way of the traditional management programs by the big brand names like Edward Jones. But it carries with it the same tax advantages of your normal retirement accounts. So the process is pretty simple for setting it up, or for getting it, for investing your capital, I should say. You set up your self-directed IRA with a custodian. We have one on referral if you'd like one. We're not directly promoting anyone on this particular webinar, so I won't be, promoting any custodians, but I do have referrals for you if you would like. You take your funds from your current investment account and you transfer it to the custodian. And then you use those funds to deploy them into whatever investment you choose, whether it be real estate, a real estate syndication, or precious metals, or your, opportunities abide. And then you watch your continued growth and the value of your assets grow in your self-directed IRA. Everything stays in your self-directed IRA. All right, what can you invest in? I mean, there are many, many different options for you to be able to invest in with or investment options you can choose from with your self-directed IRA. But of course, I'm here to talk about investing in a syndication with your self-directed IRA, I don't directly have a guide for how to be able to loan money or do hard money loans with your self-directed IRA. So we're going to focus on utilizing it to invest in syndications. But so by utilizing this, you have the opportunity to take your retirement accounts and invest them alongside an owner operator like myself into large commercial multifamily real estate assets, deals that you may not be able to have access to on your own with your own capital. Right? It allows you for diversification. I'm not saying that I don't believe that anyone should have all of their money or even 80% of the money invested into any one thing, not even real estate. I'm not even 80% exposed to real estate, and I'm a professional real estate investor. But you want to be able to have that diversification in your retirement accounts when you're talking about long-term investment strategies. So this is a way to be able to do that. And it is still giving you the key advantages of your traditional IRA custodian or IRA process. You still have the tax deferred or tax-free growth. You have the ability to invest now in tangible assets, and your cash flow can be reinvested along the way. So, like I was describing earlier with my cash flow or my distribution that I received recently from one of my real estate deals I invested in with my self-directed IRAs. I took that smaller amount of money, and I went and bought some Bitcoin with it, and it's just kind of sitting there growing, going up and going down and going up and going down as it does. But it's basically a placeholder for me while I wait for my next, for it to grow to a level where it's enough to invest into another real estate project. So, this is kind of like a mindset shift. Do you already have the capital available? The question is, it's not do you have the money to invest? It's are you investing it in the right way? And by the right way, I mean the right way for you. That's only something that you can really decide on your own if you want to be exposed to real estate or other investment opportunities that are not readily available by buying the S&P 500 alone, then, or maybe you want a certain allocation of it in one thing or another, then you do have another option with the self-directed IRA. So we covered this briefly, but we'll go into a little bit more detail on it. So the steps of setting up your self-directed IRA is really simple. You contact and create an account with your self-directed IRA custodian. You move the funds over. You can even move the investments over as well. Like you don't even have to sell anything that you have invested in many cases. You can actually even just move the actual investments and themselves, the stocks that you own. You don't even have to hit the sell button and create a transaction to deal with or something like that. I then identify the investment that you want your capital to be put into. The custodian reviews the investment that you are choosing. They even review the private placement memorandum documents that we provide to our investors, and then they fund the investment to the operator. And then when distributions occur, that money flows directly back to the custodian. And then you can go in and you can deploy that money in any way, shape, or form you like. All right, the custodian. You don't have a checkbook. You have a custodian who administers the account. They ensure that it is compliant with the rules of the road. They execute the transaction on your behalf. They're the one that actually sends the money. You direct, they facilitate. If you're looking for a referral to a self-directed IRA company, happy to provide one. All right. So let's give a brief example of an investment. So let's say you invest $100,000 into a deal. And that deal pays out a distribution of 8%. So that's paid out quarterly. So let's say you get $2,000 every 90 days. So you invest in the deal after, and then the money starts flowing directly back into your self-directed IRA account as cash available for investment. And then you can take that $2,000 every 90 days and you can choose to invest it into whatever you like. The custodian that I utilizes allows me to invest in not just real estate syndications, but even stocks, mutual funds. I can buy ETFs. I can buy all the same stuff, but I don't pay that management fee that you are usually hit with. All right, let's keep rolling. All right. Once again, just kind of like another description of how the returns flow. So quarterly distributions, you can even set them, they are automatically put into your account, and you can set them up to immediately be invested into an option, investment of your choice, right? So you can just plug it in and say every time that there's this much money on there, go invest it. Um, so there's quarterly distributions hit. There's no tax impact. So you don't pay income tax on those distributions like you would if you were receiving a dividend from a stock, let's say. Um, it is compounding and continues to compound inside that account. So that's one of the beauties of investing into cash flowing real estate assets, is that your cash flow, if it's proper, is reinvested and not just left as cash, of course. That money can start to work for you again and again and again, and the snowball compounds even more so. So, like I was describing, it's the power of the compounding of your money in your self-directed, in your inside your retirement account. That is the greatest benefit of investing in real estate, is the cash flow, because it continues to grow after you've received the distribution. All right, there are some rules to be aware of. So first of all, no self-dealing. That essentially means you can't go and buy something from yourself. Like, you can't go in and just invest it in myself. They have options for you to be able to make penalty-free withdrawals. So there's plenty of options like that. You don't need this to be able to have access to cash if you're in a dire straits situation. So it avoids conflicts of interest. It would be prohibited to, so examples like selling personal property or lending to yourself. Like, I'm going to go flip some houses. I want to lend to myself to flip a house. You're not allowed to do that. So you can't personally benefit from the investment. So, for example, some people think like, oh, I'm going to go own a beach house in wherever place. Well, I don't know the exact number or percentage or amount you're allowed to utilize it, but it's not very much. And from what I understand, it's not supposed to be that case either for you or your family. So you can't invest in a deal where your daughter is going to be the beneficiary. So you can't like do a be your daughter has a real estate deal, or you can't invest your self-directed IRA money into that. You invest your regular money, not this. And all transactions have to go through the IRA. So any benefit gained, any dollar earned, any tax losses or anything has to flow through the IRA. All right. Why are you now just hearing about this? Well, it's not something that is promoted by the financial industry on a high level. They want to have full control over your money. That's how they make their money, is charging you the 1% or more portfolio management fee, regardless of whether your portfolio goes up or down in value. They still take 1%. It doesn't really matter to them. So most people have not heard of it because it's not promoted. The next thing is, once they do find out about it, they might believe that this is, really complex. Like, I got a lot on my plate. I've got two kids. I've got a job. I've got, cars and so on and so forth in my life. Do I really want to, be responsible for my financial success? I don't know. But it isn't complicated. It's something that is actually pretty reasonably achievable by anyone, is this process and the process of directing a portion of your retirement accounts yourself. Yeah. So where does real estate fit into your investment, your retirement plans? Well, um, the reason why we choose real estate is for cash flow. We want to be able to reinvest our distributions. You have the ability to, at least in commercial real estate, you can create forced appreciation by decreasing expenses and increasing income, thereby increasing the value of the property, giving you opportunity to either refinance the property and pull money out of the deal, or you can and or sell the deal and then realize the gains. Of course, in an IRA, you don't pay taxes in the midstream of that transaction. Full disclaimer, I'm not a financial advisor, a lawyer, or attorney. I probably should have mentioned that earlier. But the So forced appreciation through value creation on operations. Um, and it's not just market driven. The beauty of commercial real estate is that it's not market driven based on how much did your neighbor sell their house for. Oh, I skipped one. Right. Our focus at Green Forest Capital, we focus on multifamily properties in Missouri and Arkansas, and also some surrounding markets as well. We're buying 2000 and newer properties, so these are not like older assets that need to be completely rebuilt. These are newer properties in growing communities. And we focus on operational driven returns. What does that mean? It means that we really focus on every single dollar and every single aspect of the business. It's not based on injecting capital into the physical property. It's about getting the most out of the operations of a successful business. That's the way we approach real estate investing, because these aren't just single family houses. This is a business. These are businesses that we operate in yeah our ecosystem. Um, so yeah, operationally driven returns. Uh, and what does that result in? So our execution strategy is, focusing on operations. We want to streamline every single thing we possibly can, and so that we can optimize every aspect of the business and find those little efficiencies that we can institute in our properties, and to, make them that much more. I'm going to keep using the word efficient. Yeah. Financially. So we have a strategic leasing strategy that we deploy at each and every one of our properties. That's individual property by property. Some people think that the same plan works for the same business. It's just a new location. That's not exactly how it works. Every single property has its own separate leasing strategy, and that is to make sure that we achieve as high of possible occupancy as we can reach. Um, this is an overlooked aspect of the business, but expense control is is, in my opinion, the most important aspect of operating a multifamily property, commercial multifamily property. Expense control. That's where the money just, it's like a sieve. It's just, the money just flows right through. We want to plug those holes. And just focusing on making decisions based on the long term of the property and not making short term types of decisions. And also focusing on our strategic direction of the property, making sure that we're always watching and making sure that we're going in the direction we originally planned for, or have strategically adjusted as much as we need. We are looking at future opportunities. Right now, we have multiple deals that we are underwriting. So, and we are focusing specifically on Missouri and Arkansas and Kansas. We have some other kind of territories that we're exploring, but not very much. And we're going to be expanding into a new asset class in the near future, expanding into self-storage. More to come on that. Key takeaway. You may already have the capital. It's, the opportunity isn't just finding the deal. It's on using our capital in the right way. It's about making sure that your money is growing in the right way for you and growing as much as humanly possible. Maybe you're very risk adverse, or maybe you're very risk tolerant. You should have true control over how your money is invested. And my closing thought is, you don't need to know everything, to have success or even to get started. You just need to have awareness. You need to have a structure. You need to have partners. You have advisors, people to help you make sure that you reach your goals at the top of the mountain. So next steps, if you'd like to learn more, I'd be happy to continue the conversation about the process that I have gone through and that many of my investors have gone through with investing with us in multifamily syndication project with Green Forest Capital and your self-directed IRA. Yeah, any questions from the live audience? No? All right. Well, we'll make this a short one this month, 30 minutes. I appreciate everybody joining who was able to join live on Zoom. And just another very quick announcement. We've got Tours and Pours this month. We're going to be touring a property in St. Louis on Thursday. So if you're in the area, would love to have you out for Tours and Pours. Just shoot me a message. You can find information on my Eventbrite page or on Facebook at Make It Happen Multifamily. So yeah, would love to be able to have everybody jump on to a phone call with me to be able to get to know each other better. So this is why I do this. I do this to meet new friends. Thanks everybody for joining. Scan the QR code. We can jump on a quick phone call. Nice meeting you, and I hope you have a great day.